We have a panel presentation on taxes, investing for Americans in Portugal. We're going to have three speakers. Rui Magalhaes from DMA Taxes. Margaret Conklin is going to be talking about U.S. taxes. And myself and Tom are going to be talking about investing for Americans in Portugal. So with that, we will start. We're going to have a question and answer at the end as well. That'll be the end of the formal question and answer. And if you want to join us, we'll go upstairs for a few drinks and have more questions up there.
Thank you, Shane. All right. I'd like to thank Margaret and Shane and Tom for organizing this and for inviting us to be part of the panel. So, for those of you that don't know us, my name is Rui Magalhaes. We're from a boutique accounting company called Duncan McGregor Accounting. And in the front row is Mr. Duncan McGregor, the founder of the business. He made the move long before any of us. He made the move, I think, in 1987 to Portugal. I made the move 3 years ago from South Africa. We both South African chartered accountants. And we focus mainly on the expat community. Majority of our clients are American, Brits, and South Africans. We have over 2,000 individual clients. Some of them are very happy with us, and some of them are not. But I think just from a show of hands, can you let me know how many of you are clients at the moment that are here? Okay, there you go. Thank you. Sorry, apologies if I don't recognize your faces, but a lot of the times we just do a Zoom call 24 months ago, and I just know you by name and NIP number. So hopefully you're happy with the service you receive. All right, so a lot of this might be, I wasn't quite sure of the caliber of person. Have you just moved? Have you been here for a long time? So just some real basics around Portuguese tax. Our calendar year runs from January to December. Filing season starts in April of the following year and ends in June. And it's physically impossible for ourselves to file 2,000 tax returns. So if you have foreign income, you are eligible to apply for an extension. Generally, your returns in the US are not, most of them are not ready by the end of June. And that gives us a little bit of a safety net until December, file your tax returns. So a lot of you we might still have to file your returns or file it after June. Okay, that's right. Now, just in terms of filing, how it works in Portugal, similar to the States, you can file a single return or a joint return. That decision I only make when we're preparing your tax returns. Only then do we have all the data available to make that call on what will give you the best outcome from a taxation point of view. Most of you, it doesn't really matter because you're under NHR, and a lot of the income is tax-free, and the rest of it is subject to what's called autonomous tax, and that's where it's a flat tax rate. So the big one for the Americans is the capital gains on the sale of equities, and that's subject to tax in Portugal at 28%, and we'll talk about that a little bit later. But yeah, so we have a joint or a single filing option. Autonomous tax, when we refer to autonomous tax, it refers to income that's taxed at a flat rate. So it's almost like a separate assessment. We have dividends, interest, it's taxable at 28%, rental income, 28%, capital gains. This is all according to the normal tax rules, not NHR. And if you have employment income or sole proprietor income, in Portugal we call them trabalhadores independentes, which is an independent trader, freelancer, sole proprietor, independent contractor, it's all the same thing. And those are taxed at the normal tax rate. All right, so I love speaking to people that move to Portugal with NHR. And when I tell them they have a tax bill to pay, they go, it's not possible because I'm on NHR. It says I don't get taxed on my foreign income. And I always try and say, I said, that's the postcard. And the postcard is the picture you see on the left, which is a beautiful white sandy beach. And then once you actually submit your tax return, you get this picture here, which is a not so nice looking beach. And that's NHR. So it's advertised as tax-free in Portugal, but it should come with terms and conditions. Okay. It's tax-free in Portugal. It's not tax-free in your country, generally. You're going to pay tax somewhere. And that's generally what the layman Portuguese person doesn't understand. So you would have seen they've changed, cancelling NHR, cancelling the golden visas. They blame me on property prices escalating. But it's literally because they think we don't pay taxes at all, which is not true. You pay taxes in the US, you pay taxes in South Africa, you just don't pay taxes on that income in Portugal under NHR. So it's coming to an end. Question is, how does it affect me? If you have NHR, it doesn't affect you. So you carry on with your NHR status until the 10 years are over. And after 10 years, you have to decide what your tax strategy is going to be then, or when your NHR expires. If you haven't moved to Portugal yet, it's probably too late. So the announcement that was made was said that it's coming to an end in 2024. Now, no more guidance has been given. We don't know if it comes to an end if you have to be tax resident as at the 31st of December 2023, or if they're going to extend that deadline and say you've got to register. We don't know. So to be safe, if you're advising family and friends to come to Portugal, try and get them to be tax resident in 2023 and apply for NHR in 2023. So that's what as a company, that's what we're advising people that want to move to Portugal. We don't know what the rule is. Who knows? They might even say June, and then you get an extra 6 months. But if you want to benefit from NHR, the sooner you move, the better. Right, now we were talking about the capital gains, which is quite a big story for the Americans. So Portugal and USA has got a double tax agreement. And in that double tax agreement, it specifies where all the income gets taxed, or who has the first right to tax that income. Your country of tax residence, which is Portugal, always has the right to tax you on the income. On all the income, the only income that's generally excluded from that is state pension. So if you work for the government in the USA, that income is under the DTAs is generally only taxable in the USA. Okay. Any other income is taxable in Portugal. Now, I'm just talking about normal tax rules. Forget about NHR. The protocol is what I've highlighted in yellow there. Basically says that the USA may tax its citizens as if this convention had not come into place. All right. And that's what the US citizen took the Portuguese government to the arbitration court and he won on capital gains. But his capital gain was around about 170,000 euros of tax that he had to pay. So it was worth his while to go to court and go to those lengths to challenge it. We've tried to challenge a few of those and we haven't succeeded. And we challenge via the normal Portuguese EBAL count on your tax portal. And we recommend that we try the first one, they decline, you then have to make a choice. If you are getting taxed on your capital gain, whether it's worthwhile to just pay it or go see a lawyer. And if you're going to go see a lawyer, you're going to start incurring costs. So your gain's got to be well worth it. We tried to get an estimate from an attorney company and they said 20,000. So if the tax that you've got to pay on your capital gain in Portugal is more than 20,000, then it's worthwhile challenging it. Because that's what it's going to cost you to see the thing through right till the end in the arbitration court. And that is a specific clause that's only specific to Americans. This is protocol clause that says, it's quite funny because the double tax agreement is 5 or 6 pages. And then there's one paragraph that says, if you're American, forget about the double tax agreement, we can tax you. And that's what everyone's telling me is saying, but they can't tax me because I've got NHR. And I said, well, and the reason for that is in the double tax agreement, capital gains is only, it says, only taxable in the country where you are tax resident. Most of the other income says the other country may tax you. And when it says may tax you, all that means is Portugal has to give you the credit for the tax that you pay in the foreign country. That's what that may tax you. It means both countries have the right to tax you, and Portugal has to pass the tax credit for the tax that you paid in the US. When it says only taxable in Portugal, Portugal's not interested if you pay tax already in the US. They're going to say it's only taxable in Portugal. USA should not have taxed you, go get your refund. So now this protocol thing is quite a new thing for the Portuguese tax authorities. So we're going to see how it pans out next year on the assessments. Simple stuff, pension income. If you came to Portugal after March of 2020, you obtained tax residency, your pension income, whether it's a Roth, an IRA, Social Security, private pension, whatever you want to call it, you pay 10% in Portugal. You won't get the credit for the tax that you paid on it in the US. There's no distinction between a Roth and an IRA in Portugal. We have consulted with attorneys, they agree with our view. There is apparently a company in the Algarve that says the Roth should not be included in your tax return because it's already being taxed in the USA. But in Portugal, in your US tax return, it says pension, I think it's pension, retirement annuities, and distributions. The minute Portugal sees that, they're going to tax you 10%, and this is under NHR. Interest and dividends are tax-free, rental income is tax-free, capital gains on the sale of property is tax-free, capital gains on the sale of equities is taxable at 28%. That's where I said you're subject to appeal, you got to take it to court. And then a lot of our American clients have got LLCs or S corporations that they then distribute those profits. Well, they don't distribute it. The laws in the US says, and Margaret will talk about it, they get taxed in your personal name in America. That is the same thing as profits or dividends of a company. We include it as dividends and you don't pay tax on that. So that's the typical structure for someone that's still got a business in America, is they have an LLC or S corp, and we declare it as dividends on your Portuguese tax return. And then what to do after NHR? I mean, these gentlemen are, Shane is from Spain, and maybe we all move to Spain and take advantage of their NHR scheme. But yeah, but living in Portugal, paying full taxes, as you can see, they're quite high. Our maximum tax rate in Portugal is 48%. So if you have pension income from the States and you don't have NHR, you could end up paying 48% on that pension income in Portugal. Right? So that's the end of my presentation, and we'll leave the questions for after everyone's spoken. Thank you.
Thank you, Rui. Yeah, thank you very much. What Rui was talking about, it brings me, well, maybe I should introduce myself. I am Margaret Conklin. Moved here about five and a half years ago, and in an effort to retire or slow down a little bit, that hasn't worked very well because so many Americans are moving here. But I've been trying to build a practice to help all the Americans with their U.S. tax compliance over the years. So I've joined with Jason Matthew, who unfortunately couldn't be here tonight. But Jason is an enrolled agent, and that doesn't mean he's an agent for the IRS. It means he has passed the exams and has the experience to help you as American citizens with your U.S. tax compliance. So he will be working with all of my clients for many years to come. He's much younger than I am, so hopefully many of you will continue to work with him for a long time. But some of the concepts I wanted to talk about, and I think you heard from Rui, is a lot of it is uncertainty. We don't have real concrete answers for a lot of the Portuguese tax rules. Some of them are, they're being questioned in arbitration court. The tax laws are changing, but the concept I try to live by, and as an American, you're a resident here in Portugal, so Portugal taxes are your foundation, and that foundation is whatever your tax advisors suggest, or what you have decided your concept is going to be here in Portugal, and we build on that. So for example, if you pay the 10% tax on your pension in Portugal, we take that as a credit on your U.S. tax return as a foreign tax credit. So we work in conjunction. If you do not pay any income tax in Portugal on your pension, then you pay it all to the United States. But the complexity comes in that both countries tax you on your worldwide income. So don't think, oh, well, this is U.S. income, so this goes on my U.S. return. I don't have any Portugal income. That's not how it works. If you're a Portugal resident, all your worldwide income should be disclosed to the Portuguese tax authorities. And then we look at that kind of after the fact and say, well, you had to pay X dollars to Portugal, so we take that as a credit. And the treaty helps in some situations, but just as Rui mentioned, there's a treaty and it goes on and on and on, and it's legalese and you can't understand it. And then you get to the bottom and it says, oh, but if you're an American citizen or a green card holder, we can tax you any way we want. So this is where the coordination and the communication between your Portuguese tax advisor and your American tax advisor comes in. You can't do them independently. Just as an example, I think Rui mentioned he had a client that she paid her U.S. taxes and said, same thing, I don't have to pay Portugal any tax. Yes, you do. You have to pay Portugal 10% tax on your pension. Well, she had to go back. She should have gone back and amended her U.S. tax return because she should not have paid the U.S. that 10%. So coordinate between the two. That's important. And some other concepts that I wanted to hit on a little bit, timing. Timing is really difficult because of the tax seasons. So now that you live outside the U.S., your U.S. tax return is due June 15th. Well, the Portuguese tax system, as Rui mentioned, it opens April 1st, so it's kind of hard to get the Portuguese tax return finished, the U.S. tax return finished to figure out what you owe to Portugal and what you owe to the U.S. So we often have to extend the U.S. return. It's perfectly okay. It's an automatic extension till October 15th. But it's difficult to figure out which goes first. It's a real chicken and an egg problem. So we just have to kind of work together to figure out, maybe you do the U.S. return first and show it to your Portuguese tax advisor. They calculate the 10% tax on the pension or the capital gains tax, and then we take that tax and put it back as a credit on your U.S. tax return. So it's complicated, it's frustrating until, it's like a dance step trying to figure out which one goes first. So just talk to your U.S. tax advisor and your Portuguese tax advisor. There's no right or wrong way. It's just coordination between the two. There are a lot of complexities in U.S. taxes, and I think there's a lot of new changes coming to the Portugal taxes too, as I understand. I wanted to spend a little bit of time today talking about what we expect for next year, but we don't know if there's going to be any tax changes yet in the United States. Hopefully not. I'm not sure they can make any other decisions between now and the end of the year. Exactly. A couple things. Yeah, so I kind of mentioned the foreign tax credit. I want to talk about foreign taxes for just a minute. That there's two ways you can take foreign taxes on your U.S. tax return. One is a cash basis and one is an accrual basis. Now, cash basis is great if in 2023 you pay your 2023 Portugal income taxes. But that's not the way it works. Normally, 2023 Portugal income taxes are paid in 2024. So we like to use the accrual method, which gives you better matching. So that's why this chicken and egg concept comes in, that on your 2023 U.S. tax return, I want to show your 2023 Portugal income taxes. So it's tough. Sometimes we have to estimate what your 2023 Portugal income taxes are going to be, but if we can wait for what I would call the final assessment, that's probably not the proper term, but the invoice that you get, we like to wait on that and then finish your U.S. tax return so that your U.S. foreign tax credits gives you the best answer. a lot of people ask questions about FBARs and Form 8938s. These are two forms. The FBAR, you can prepare this. This is outside the idea of U.S. income taxes. Don't be afraid of it, but just do it right. You're supposed to report all of your non-U.S. financial accounts. This includes bank accounts. It includes pension accounts. If you've got any trailing pension accounts, say from when you worked in Switzerland or the UK, and it should include other financial accounts like life insurance accounts. So read the instructions, do it right, and you can do it. You don't need an accountant to do it. It's all online. But one thing I see over and over is you have to convert the amounts to dollars. It's, if you have 10,000 euros, that equals what, $10,800 or something. So remember to convert your amounts to dollars before you submit it. Okay. A few other things to mention about U.S. income taxes, and Shane will talk a little bit more about this, is the four-letter acronym of PFIC. You don't want to get involved in investing in a foreign mutual fund or foreign investments. If you're here on the golden visa, you're kind of stuck. That's the way a lot of people have bought their golden visa, is by investing in these partnerships or kind of mutual fund types of things here in Portugal. But if you're at the bank or at the bank or somewhere, and someone's suggesting that you buy a Portugal Golden Investment Fund, don't do it, because it's very toxic to Americans. So if it's single stocks, it's okay. If it's bonds, it's okay. But if anything, any foreign ETFs, any foreign mutual funds, any savings that you think you're going to have, or any gain, will be taken by your accountant to do your tax return, or by the IRS when you sell it, because it's very toxic tax-wise when you sell it. You don't get capital gains treatment. A lot of the income is taxed at ordinary tax rates. So be careful when you're making investments. That's why you should always talk to qualified American advisors who understand these tax rules. One thing I like to mention, I know a lot of us here are Americans. If you have a non-resident alien spouse, if you have a spouse that's not an American, be very, very careful. Portugal and the United States do not have an estate tax treaty. And this is really scary to me for a lot of people, because what that means is if the American has assets left in the United States, stocks, bonds, if the American dies, the non-American starts paying estate tax on assets over $60,000. You're like, no, it's 12 million. Yeah, it's 12 million if your spouse is American. If your spouse is not American, you're looking at some horrific results. So be very careful if your partner, your spouse is not American, and you need to do some planning, which usually incurs getting your assets out of the United States. So, and that's probably something Shane can talk about too, because if it's in cash, it's okay. But if it's in if it's in the stock market, it can be horrific. So that's something that scares me to death with the Americans moving here, that's not talked about enough. The other thing, always keep your U.S. bank account open. You're probably, particularly during NHR, you're probably going to owe a little bit of U.S. income tax because your taxes in Portugal are so low. And so many people come to me and say, I don't have a U.S. bank account anymore. Well, you have to. So always keep a U.S. bank account. I kind of promote wise.com because it's free. They take Americans. It's online. And, it seems to work pretty well. And you can draft your tax payments directly out of Wise, and they'll put the refunds directly into Wise too. But that's important. And then last but not least, some of the important resources that I like to tell people about. Don't be afraid of the internet. I get email all the time. When's my tax due date? You type it into Google and it'll tell you. You don't need me to tell you when your tax due date is. So if you're thinking about something, do a little research. Go to verified accounts. Go to irs.gov. They do a pretty good job explaining things. Don't go to some of these wacko websites that tell you that you don't have to file tax returns because you're not in the United States anymore. So that's my great resources. Yeah, very good. Thank you. Step to the back there, Shannon. Yeah.
All right, thank you, Margaret. My name's Shane Clark. Our company is EuroAmerican Financial Advisors. We're not based in Lisbon. We're in Sevilla, Spain. We're licensed by the Spanish investment authorities to provide investment advice and financial planning services. And our clients are almost exclusively U.S. citizens in Spain, Portugal, France, Italy, the southern countries. So we have our first slide here is a U.S. expat checklist. So if you look, there's kind of 3 columns. And this looks at what phase you're in during your expat kind of lifestyle. Before you move, if you're a proactive person, you might take care of some of these types of issues, getting a visa, looking at real estate, what happens to your bank account, your taxes, all those types of issues. In the middle, you have issues just after you move. So things you might have to file in Portugal within the first 6 months or the first year, things you might have to take care of back in the States. And then the third column is ongoing issues. So you've been here for 10 years, things we need to check, kind of review on a time-to-time basis. And this is something, I don't want to go into too many details here, but it's something we do with all of our clients when they first come on board. We have a look at their whole picture and make sure they haven't forgotten anything important that might be not so great on a U.S. tax return or Portuguese return, or if they're buying, investment products you shouldn't be buying. So we try to avoid any negative surprises. Like, for example, we had a client a few years ago who they were wondering if they should sell their house moving to Spain before they moved or after they moved. And we luckily caught that, worked with a tax professional in Spain, and avoided some nasty capital gains. So the next slide here is we're going to look at some investment portfolio considerations. The first one, who can you work with, right? Licensing. It's tricky as an American when you move abroad. You can't work with local advisors. They might put you in these PFICs, some passive foreign investment corporations, might be taxed punitively in the U.S. You might not be able to work with your old U.S. advisor. You told them you've got a foreign address now. They don't want to work with you any longer. So finding who you can actually work with. As advisors, we're supposed to be licensed in the jurisdiction where our services are offered. So luckily, we set up our shop in Sevilla. We also have a firm in the U.S., so we're licensed in both jurisdictions. But following the rules, you shouldn't be working with a U.S. advisor if they aren't licensed in the EU. And additionally, going through the whole process, we've learned a lot about local customs, taxes, things that affect you as an expat that a U.S. advisor might not know. The next one is the same thing, custody. Who can you work with? Which custodian can trade your accounts, hold your accounts, if you tell him you actually live in Portugal? So it can be quite tricky. We work with 2 different custodians, Charles Schwab and Interactive Brokers. Some of you might be familiar with those ones. Portugal, luckily, is back on the list now with Charles Schwab as of this year, so you can have accounts there again, which is great. They're quite easy to work with. It's a user-friendly portal. Interactive Brokers is nice for us. We can hold multi-currencies. The trading is on every exchange kind of globally. It's not as user-friendly maybe. But also something interesting there is Charles Schwab has 2 different types of accounts. So they have a retail account, if you just send them an email if you want to open an account, and then they have an institutional account. And that's when you go through a US-based registered investment advisor. So what's the difference? With an institutional account, you can hold products from the US, like exchange traded funds, that you couldn't hold as a retail account holder. And that's quite beneficial sometimes if we're trying to get diversification in your account. You might not want to have an all stock portfolio. So cross-border portfolio considerations, that's the same kind of thing. When we're looking at your total investment portfolio, what can you hold in it? So you might have used mutual funds from the US when you were living in the States. Now you can't hold mutual funds because you have a foreign address on the account. And mutual funds technically are supposed to be licensed in the jurisdiction where their services are offered. They're not licensed in the EU, so the custodians say, can't hold those. So what about mutual funds here in Europe? Well, Margaret mentioned these passive foreign investment corporations. Those are treated as ordinary income, generally in your US tax return. Any capital gains on those, so you don't want to hold those. Okay, what about US exchange traded funds? Well, there's another regulation there called PRIPS, Packaged Retail Investment and Insurance Products. That's an EU regulation that says US funds need to produce this fact statement for the EU regulators, and the US funds don't produce those. So the way around it is this institutional Schwab relationship. In most of your account types, you can then hold the US exchange traded funds. And then investment selections, choosing a diversified kind of global portfolio, taking into account currency risk, these types of things are quite important. And that's something that we do in-house. And I'll go back, I say I missed currency. So currency, there's two big things there. One, how do you move money in the most cost-effective way? So do you use a currency broker like Wise, OFX? We recommend that. It's a good option. It's easy to use. It's always going to be cheaper than if you go through your bank. And another option there is using your broker. So someone like Interactive Brokers, you can trade within your account, in your investment account, and then send a wire out. And you usually get close to an institutional right there. So it's pretty good. The other thing is currency risk. So as an expat, if you come from the US, you have US dollars your whole life, you move over here, now your expenses are in euros. That's a whole new layer of risk for you. So there's an old adage that your investments should be in the same currency as your expenses. And coming from the US, going to the euro, that's not necessarily the case. It'd be different if you were coming from someplace where the currency, such as Argentina, where the currency has vastly deteriorated and does quite often. But it's something you need to be aware of and need to manage. Right now, I think we were talking about the US government having some issues with passing things. So previously when that happened, the US debt was downgraded, and then the value of the dollar did decrease, relative to every other currency. So something to keep in mind, something we need to manage. And finally, tax management. Working with a tax professional on the US side and the Portuguese side to make sure they communicate and optimize that situation, as well as kind of the third pillar, your investment portfolios, managing in a tax efficient manner on both sides to make sure it's optimized. So this one's looking at all of these different things. And if you optimize kind of each pillar individually, you're not going to take advantage of the whole picture, which needs to be, I've kind of tried to create a little gear here in the middle. Everything needs to work together. Your taxes on the US, the Portuguese, and your investment accounts to have the most efficient kind of financial situation you can have. So the top layer, we need to optimize both sides of the taxes. The second layer, investment selection, and I say view the fees with a holistic lens. So you might have an advisor you pay nothing. They might put you in products where there's a 5% kind of load off the top, and then embedded fees of 3%. So that's quite a high total fee. You might have an advisor you pay half of 1%, he puts you in products with 2% embedded fees. Then you might have an advisor you pay 1%, but you have an all stock portfolio with no embedded fees. So it's important to look at kind of the whole picture. And then the last one, risk management and financial planning. Another big portion of our business is doing financial plans. So we sit down, we look at your whole financial situation, we create a balance sheet, statement of cash flow, income statement, project that into the future, see where you're going to be at retirement or down the line. And that helps us mitigate any potential risks that you might have as an expat in your total financial picture. So our two services are investment advice, financial planning. Some of you might be interested in portfolio management as well. And we have the US firm, which is run by my partner, Tom Zachystal. It's in San Francisco. It's called International Asset Management. And Tom's been running this firm for over 20 years, provides those services to U.S. expats kind of all over the world. So I'll let Tom talk a little bit more about some of those services.
Thanks, Shane. Well, you're lucky because I'm going to be pretty quick. I know we're getting to the end of our time here. But I just wanted to, so I'm Tom Zachystal, as Shane said. I'm based in San Francisco, where our U.S. sister company is based. I've had that company for 20 years. We have clients in about 35 countries. What's a bit special about that company is that 90% of our clients are Americans living abroad. That's what we specialize in there. We specialized in that for 20 years. And then Shane and I got together on the European firm a few years ago. We got the license about a year ago, but there's this 20-year history in the States of managing investments for expats. And so just to clarify how the two companies work together in Spain and in Spain by extension in Europe, because we can do what's called passporting into the other EU countries, so we can work in the other EU countries as well from a Spanish office. The Spanish firm is licensed as an investment advisor, which means it gives what's called investment advice and does financial planning. And so investment advice is like, for example, what would be a suitable investment portfolio for you based on your risk profile, based on your financial goals? What type of asset allocation might that be? How much are we going to put in stocks, bonds, maybe commodities, other types of products to diversify and to manage the risk in that portfolio? And also your lifestyle. How are you going to take money out of that portfolio? Are you taking money out of it because you're retired, or are you maybe contributing because you're still working? So managing the goals you're saving for, how you're going to be funding those. Are you going to be living off your dividends? Are you going to be drawing down on the account, or will your perhaps your pensions and something else be providing for most of your lifestyle? So that's the financial planning side as well, and so that's why we do the investment advice and the financial planning through the Spanish firm. And a word about currency considerations, because as Shane mentioned, there's the old adage that, well, you're spending your money in euros, you should have your money in euros. But one thing to think about is that whenever there is let's call it a cataclysmic event in investment markets, a big downturn, the US dollar tends to strengthen. And that's because everybody runs to the most, the safest investment out there, which is still US Treasury bonds. And so if you're looking at your portfolio and measuring it in euros, let's say, because that's what you're spending in, you kind of have a hedging thing going on there if you have some of your investments in the US, because the currency will probably, the US dollar will strengthen, and that'll offset some of the losses in the portfolio if the stock market goes down, for example. So that's a pretty important consideration. Also, the other thing is the US is a very competitive marketplace. And so, not even talking about PFIX and all that kind of stuff, but you generally get better trading costs. I mean, Schwab and Interactive Brokers barely even trying to charge for trades anymore, and very low fees on things like exchange traded funds and even on investment management services. And speaking of that, so what we do in Spanish firm is the investment advice and financial planning. And then you can take that investment advice and you can go manage your own portfolio if you want. You're not obligated to use our investment management services or any investment management services. But if you are looking for someone to do investment management on your behalf, and by that we mean diversifying the investments, doing the trading, making changes based on the economy and your personal situation. If you're looking for that kind of investment management, well, then you can take our investment advice and go to another investment management firm, or you can come to our firm in the US and we'll give you a screening deal. So either way, but that's kind of how it works between the two firms. And then I sometimes get the question, and I'll end up with this, is what are we doing now? People, every time there's something like this event in Israel or what's going on in Russia and Ukraine, I start getting a lot more emails from my clients, and they kind of ask, well, what are we doing? And what we really look at are, when you look at these events, they haven't really affected the market, like stock market, that much. It's gone down a bit maybe, but also, this is kind of a traditional time, October, where the markets do go down anyway. What we are more concerned about is if this thing gets bigger in the Middle East. Okay, that would be something that we think about. But what's even more interesting these days is the fact that interest rates have gone up. And that could have big implications for your portfolio, especially if you're retired and you're looking at maybe more conservative type investments, because it's time again when you can actually get a decent rate of return on things like bonds. And that hasn't been the case for 2 years. And when interest rates were at zero for a year ago, that was a terrible time for bonds because, first of all, the yields are low. And when interest rates go up, bond prices go down. So if you were holding, especially long dated bonds last year, well, you took a bit of a bath on that holding probably. But now's the time, we're at 5% on the short-term treasury bond, for example. The long-term rates, they could still come up a little bit more because the curve is still a little bit inverted that way. But if we see say 6% on those long-term rates or maybe even 5.5%, that might be a good time to put some more money into that side of the portfolio. And those are the kinds of things we're looking at. We're also looking at in times that are uncertain, maybe we have some money in gold. We have maybe 10% in gold right now. So that's another good way to diversify a portfolio. And we use a gold exchange traded fund for that. And so with that, I kind of wrap it up and we're going to move on to the Q&A.